Let's jump right into, sorry, I'm a bit centered a bit here. Let's jump right into our session today. And like I mentioned, I gave you a heads up. I want to start with the pre-release information. So you would have had a chance to read that, or rather watch the reflection video, right? I'm hoping you'd have prepared. Sort of those that have, I'm just going to skip all the way to the email here. And I want to reflect a little bit in terms of the pre-release information. Now, that's like Amokhelo said as well. That's to the question that was asked here. If your pre-release period is not on point, right, you're going to fumble all the way through to your IOD, right? So it literally starts here. So that's where I want to start, because I want to demonstrate to you all using a practical example how what you do here filters through into the IOD. And what Kamokhelo mentioned, when she said, no, you need to put the IOD and the pre-RI together when you respond, right? Because you need to contextualize it all together. So how does that work, right? That starts now. So the question I'm going to ask, hoping that you've got, knowing that you've reflected, rather not hoping, knowing, because accountability. Trigger in this email. First question I want to ask: is it clear, right? Is it quite clear what you asked, what you've been asked to prepare yourself for here? And secondly, how did you go about preparing for a trigger like this one? Anyone, online, in the floor, yeah, you can put hands, I can see it. You can put in the comments, I can see it. Is the trigger clear? And I see the hand. Is the trigger clear? And if the trigger is clear or unclear, depending on what your answer is, well, how did you go about preparing yourself for this research? You can go ahead in the room in the back, in the black hoodie. I think you had your hand up. Yeah. Yeah. Okay. Yeah.
And then it's also they told us that they were acquired 100% of the entity. So you know how consolidations there's different types of we have the current medium certain percentage, or if there's been a change in consolidation. So in this case, there's some scope that's into a certain section of the consolidation where you're acquiring 100%. So most of my papers would be understanding from consolidation that take place, what are the journals, and actually in what kind of journals would you then take into account? Maybe if they are intercompany transactions, how would you go about treating them?
Yeah.
Yeah, it's something.
Okay. Yeah. Sorry, in the chat here. Yeah. Cool. So agreed, right? So the view in the room. So I'm going to repeat that because we don't have a mic in the room, so people online are not necessarily going to be able to hear what was shared. And sorry, what's your name before? Sorry. Pelope. Pelopile. Cool. Thanks. Cool. So Ashid in the room. Clear trigger. And I see a comment there in the chat from Sinetemba agrees. Trigger was clear. And two things, right? So I think the first important bit that I want to highlight is business combinations and consolidation. I think when it comes to unpacking accounting triggers, where it all goes wrong before you even start is scoping, right? So unlike ITC level vibes, right? You look at the required, it tells you in accordance with FRS 3, in accordance with FRS 10, right? Here, just says like preparing consolidation entries, right? So which accounting standard is relevant, right? So scoping. Okay. Now we say I want to touch on the first one. So we say business combinations, right? So we're going to apply IFRS 3 from a business combination perspective. Is that automatic, or do we have any further questions on whether or not IFRS 3 is applicable here before we unpack everything else you mentioned? In our research, we're all like, yeah, no, shot. IFRS 3, win, no questions asked. You can go for it. You say, yeah, black. Yeah. Uh-huh. Yeah. 100%. So which part of the scope of infrastructure are you specifically worried about? Yeah. 100%. So two things that she mentioned that's extremely important that we need to incorporate into our research. Being comfortable with the scope, right? Why are you comfortable that you are applying a particular standard? Right, that needs to come through in your discussions. None of this is automatic. I'm just going to sit in the standard because, oh, it's a 100% sub, so I'm in FS 3. You haven't even considered the scope. Okay, so that's the first thing. So now there's a question that's been asked here. Is this actually a business combination? Now, there isn't enough information here to actually conclude on that. But I'm like what you mentioned, Azri, like, listen, I'm going to use the pre-release information to the extent that I can to see whether or not I'm comfortable or to assess the risk, whether or not this Fodjan, is it? No, big ranch, sorry, meets the definition of a business. Okay, so what comes into your research now? What comes into your research is a definition of a business. Okay, and also that new concentration test, right? Also comes into your definition. I'm sorry, into your research, because it's scoping. That's the scoping criteria in FS 3. Now, they give you a description of what big ranch is. There's another email in the pre-release information that gives you a little bit more information down here of big ranch. Right here, you're given a little bit more information of big ranch and what it incorporates. Here, you're given a little bit about you're given the income statement of big ranch. Right, in another email, so you can start to get a sense of what big ranch is and what's going on, and you can actually for yourself just start thinking about the definition of a business. Okay, and in your thinking, okay, maybe I'll just ask the room. What is the likelihood that for big ranch does not meet the definition of a business? Risk? Is this something that you're concerned about? Prepared for? Not prepared for? Just a sense, right? There's no right or wrong answer. There's no enough information, but I just want to get a sense. Definition of a business: input, process, output. For those that have forgotten, output's not necessary anymore in the new definition. Okay, I see in the chat there, no concern, 0, right? So we're pretty much okay, comfortable that we're in FS3, but we've thought about it. Because what's the implication, right? The implication is whether or not I'm applying FS3 principles, everything that has been summarized, right? That copious list that was shared, versus taking the consideration that I've transferred for this business at 14.5 million and allocating it on a proportionate basis to all my underlying assets. Okay. That's the difference. You got a very different answer from an IFRS 3 perspective coming on the day. So you can risk researching all those lovely requirements in IFRS 3, right? And you come on the day, not a business or concentration test met, don't need to worry about IFRS 3. And now it almost changes the context of IFRS 3, right? So make sure your research is complete. Now, next question. IFRS 10. Does IFRS 10 depend on whether or not I apply IFRS 3? So put differently, if I scope out IFRS 3, if I'm not in the scope of IFRS 3 because it's not a business, does it mean that I don't apply IFRS 10, consolidation procedures? How do you know that you're in IFRS 10 as a standard? Anyone in the chat? Do you want to see anything online? Can go ahead and unmute if you want to. How do we know? Go ahead. You're stealing the show. Controller, yeah, an investee, right? Control over an investee, right? Does IFRS 10 say anything about a business? Control over a business? No, right? So what are you looking for? You're looking for, okay, here I've got 100%. Okay, so again, less concern. But now I control an investee. Investee is big ranch. Whether investee is a business or not, doesn't matter. So you cannot apply IFRS 3, right, on a business combination, but you still need to apply IFRS 10 consolidation procedures to eliminate all those intercompany stuff, to recognize NCI, to recognize, to account for everything going forward, right? So what is the message here? first message in the pre-release information, always stop and ask yourself, am I comfortable that I need to be using the standard? Stop thinking about it as an automatic thing. It's going to become even more relevant when you get introduced with a contract, right? You're going to say, you're going to get a trigger. Trigger will be a contract. The trigger will say, I'm concerned about the accounting treatment of this contract. Okay, boom, done. Right? Now the onus is on you to now scope this contract, right? So that exercise of being able to scope the contract, and I know in the Indonamo program we've spoken a lot about this, becomes quite crucial in your preparation, in those 5 days preparation. Because if you get the scoping wrong, then as a gentleman here, as question shared, you're going to be in a whole lot of pain on come IOD day. Okay, so here we are, we've done IFRS 3, we're comfortable. Sorry, let me just double check there isn't anything. I think Mia James says, would it be appropriate to cover valuations as well? Absolutely. Yeah. So let's unpack the trigger even further. I like this comment in the chat. Would it be appropriate to cover valuations as well as mergers and acquisitions from a financial management point of view? Okay. Pause. So valuations, let's talk about accounting first. Okay. IFRS 13 goes to town about fair value, right? The whole measurement premise of IFRS 3, not 13, sorry, IFRS 3 is measure everything at fair value unless an exception is applicable. Okay. Fair value as defined in IFRS 13. So I guess question to the floor. Does that mean IFRS 13 is scoped into my research, floor and online? Yes, right? I see a bunch of nods in the room here. Absolutely yes, right? Now, does it mean that I need to go to town in IFRS 13? Okay, no, I see a bunch of heads shaking as well. You don't need to go to town, but you need to understand the basic principles of fair value. Because what is a common misconception? Oh, it's ITC vibes. The examiner will give me all the fair values. Okay, so that's not APC, right? You need to be comfortable with the principles of fair value. So that if you need to think about it, question it, identify the issue, right? Because a lot of indicators in APC identifies this potential difficulty. So I haven't given you the information to fully conclude, but because of what you've read, you're comfortable enough to say, listen, I'm reading something here, and this introduces this complexity in IFRS 13, right? That will be an indicator that's available. We'll see how that will play out when we look at the IOD. Okay, so very important question. So when a standard refers to another standard, so another example, IAS 36, impairment testing, recoverable amount, higher value in use and fair value less cost to sell. Where does fair value come from? IFRS 13. IFRS 13 is scoped into your research. Okay. If you've got an IAS 12 trigger, right? Deferred tax income trigger for accounting purposes. What does that mean? It means everything is scoped into your research, right? Because where does deferred tax start? Deferred tax comes with a carrying amount per IFRS in accounting. So your research is not blown up into epic proportions. Okay, similar thing with IFRS 3, which I want to unpack shortly. But I think there's a question in the back. There's a hand in the back. Yeah, go for it. Is it cool? Now I'm taking the conversation elsewhere. So if your question relates to something we discussed then, yeah. Yeah. No, not at all. The timelines they would have given you the comfort that it's not applicable, but what you potentially have there is a subsidiary with the view to resell. So within the scope of your research, not overcooking it, in my opinion. But there's, again, just like with the picture of a business discussion, there's enough there to give you comfort that you don't need to worry too much about those principles. But definitely, yeah, I agree. Yeah, that's not too far of a reach.
So almost similar.
Absolutely. Okay. Oh yeah, sorry. The question was, would it be too much of an overreach to start thinking about IFRS 5 subsidiaries with the view to resell because of the strategy of acquiring the business, turning it around, and then selling it, right? So answer to that was yes, it's okay to start thinking about it, but because of that whole turnaround process, and I think somewhere in the document, PRI document, you're also given a little bit more about how long it takes to.
You're muted.
Alton, you're on mute. We can't hear.
Mute. Mute.
Someone muted your computer. I don't think it's your mic, it's the computer.
Computer is on computer, not the mic.
Teams, you're on mute on Teams.
Aslam, we can't hear you.
Ayino Ason.
Can you all hear me now?
Yes,
No.
unmute again.
Can you all hear me now?
Yes, you can.
Okay, fantastic.
Yes,
Cool.
yes.
So yeah, I was just busy joking around in the room here that you guys hate my voice so much that somebody had to unmute me in the online. But yeah, I'm unmuted, should work, and I should still hear everyone if you just unmute and also speak online. So yeah, question, just to recap very quickly. Question was, would it be too much of a reach to go into IFRS 5 subsidiaries with a view to resell? So in IFRS 5, there's specific criteria or specific requirements for subsidiaries with a view to resell, right? Is that too much of a stretch? And the reason why that was coming up is because our strategy with Big Ranch and other acquisitions of franchisee restaurants is to acquire them when they're struggling, turn them around, and then sell them, right? It wouldn't be too much of a stretch was my response to that. But ultimately, again, there's enough information in the PRI for you to have comfort that you don't need to go into too much detail in terms of IFRS 5, but just covering your bases, the basics of the standard is sufficient in terms of your research. But I'm liking how we're thinking, right? So being triggered by information in the PRI, but also thinking specifically about the scope in the standard before we go on a tangent. Cool. So let me scroll down here, see if there's anything else. Cool. Okay. Cool. So the next thing that I wanted to talk about is now we're in IFRS 3, or we're comfortable that we're in IFRS 3, right? Do we now then go and just research everything? Because I mean, you mentioned a lot of technical principles, which I wouldn't disagree with, like indemnity contracts and contingent liabilities and whether it's leases or whatever. So IFRS 13 is quite an enormous standard. And also we've spoken about IFRS 3, business combination, is enormous. Okay. IFRS 13 is also dependent on what you're trying to get a fair value of, right? So in my preparation, is it just a copy paste of the principles, revising examples, maybe watching some Endonamo videos? You hear Rendani's lovely voice because he did those videos for IFRS 3. Is that extent of your research? And then I'll just see front. Whatever happens on the IOD happens on the IOD. Or can I be a little bit smart about a trigger like this? Because you're either going to get one of two types of triggers in my view. One like this, one sentence. Okay, that's it. Then you're left on your devices. I'm concerned about deferred tax on this. I'm concerned about this contract. Okay, auditors are coming through. They're going to bring up this concept. Okay, I need your help. Listen, one liner. Or you get a trigger like the one we're covering trigger in task B, where you have a lot of detail. This is what this stuff looks like. These are the parties. I'm concerned about this. Okay, so this is a one sentence sort of trigger. So is the extent of your research just updating my knowledge, revising the whole of IFRS 3, and I'm going to use my ITC syllabus as my guide. I'm going to watch Rendani's videos, I'll try a few examples, and that's it, I'm sorted, I'm ready. Or can we be a little bit smart about triggers like this? Can I hear it? What did you all do in your research? Or was that the extent? Can I hear that too? Can I just get some feedback, please, online? Okay, Shem, I don't know what Blessings is laughing at, but I'm hoping not. I hope you're laughing with me and not at me. Thoughts, guys, on the research? Yeah, go for it. Yeah.
I actually
You're on mute again.
Austin, you're muted.
Hey peeps, who keeps muting me? Maybe online. So it is behave. Cool. Thank you for that. So feedback from the room is that extent of the research was to and it sounds like it's a textbook, some sort of a textbook or a book that summarizes some principles. You went to the group consolidation section and just revised some examples, revised principles, and that was almost the research that was done. Now let me have a look at the chat. Cool. I don't see anything extra here. Hectic echo, laughing face. Okay, I'll deal with that if 5 questions shortly. I want to see if there's anything that almost supplements this point. If it's 3 requires us to recognize identifiable assets. Okay, cool. Okay, on the day there might be, agreed. Enemy of progress, I agree. Okay, yeah, please, yeah, stop muting the mic. It's not funny. Okay, all right. So, so I think the sentiment in the chat is pretty much the same. So I'm not going to read every single comment because that's the same. The only additional point is that I'm also going to look at the asset principles. I'll look at the consolidation principles. But now, the point that I want to raise, and I'll come back to the IFRS 5 point, non-Tokozo shortly. The point that I want to make is that we can be a little bit smart here. And the same holds true for triggers like IS 12, right? Because to your point, what does IFRS 3 do? I think we're all comfortable with the principles in IFRS 3, right? We're going to recognize identifiable assets, right? Identifiable assets and liabilities assumed at fair value unless the recognition exception is applicable. Okay. So then what's the first key thing that we should be thinking about here? We are acquiring big ranch. So I need to recognize big ranch's assets and big ranch's any liability I'm assuming is application whatever at fair value unless the recognition or measurement exceptions are applicable, right? So is there a way that I can get a sense of what assets and liabilities I can expect big ranch to have? Now that is key, right? The word expect. I think Freddie also somebody spoke about it. Freddie or maybe it was you, you cannot perform a review unless you come with an expectation of what you expect to see, right? If you don't have that, and somebody said, I don't even know where to start in my review, right? Because you didn't create an expectation, right? You compare what you've been given, okay, and you compare it to your expectation, and where there's mismatches, those are your indicators, your primary level of indicators. If you don't get a review on the day, that's fine. If they ask you to draft the journals, or they ask you to prepare a memo describing the journals, that's fine, because what do you have in your previews? You have an expectation of what the journal entries need to look like. You're going to supplement it with your IOD, you're going to put it together, and you're going to draft a technical memo. So the key is here that the extent of your research is not just to revise principles. Okay, in fact, that's 20% of your research, in my opinion. Okay, the rest of the 80%, maybe 20% a bit lower. Okay, I'll be a little bit kinder. 40% of the research. Okay? The rest of it is actually trying to apply the PRI to the extent that you can. Okay, and then all the missing information, we now need to flip the table on the examiner. Okay, I'm coming on the day, examiner, and I'm expecting X, Y, Z information from you for me to be able to deal with whatever on earth you're going to give me on the day. Okay, you're not just receiving. You're not just going to be like, okay, I'm going to arrive on the day. I'm just going to be surprised by what I get. No, you gave me some information. I thought about it. I've concluded on it. But now I expect you to give me all of this information as well for me to conclude on the rest. And then you get on the day, and then your expectation is met, right? gives you that motivation, that momentum. Okay, cool. So how can we go about doing this smartly? Thinking about what assets or liabilities we can expect from big launch. Thoughts? And also remember, APC simulates real life, right? ITC levels, right? We give you all the information. It has to be perfect. There has to be one answer because we have to market. APC, you are all going to be chartered accountants in real life. I'm going to come to you as a CEO and I'm going to say, CA in my business. I pay you a lot of money to be a CA in my business. We bought a business called Big Ranch. I don't know how to count for the same. Go forth and conquer. Right? What are you going to do as a CA in business? How are you going to go about? No one's going to give you a scenario with all the information you need. You need to go fishing for that information. So let's start. Because now you can't ask anyone besides people in your group, right? So let's start fishing for information. What would you do as a CA? You need to account for this thing. What information do you want? Let's hear it. What information do you want? Yeah, go for it. Absolutely. Now you want to know, like, we paid an amount for this, right? You say here that the information that we have is, so let's start with consideration, happy. Where is it? We paid an amount, 14.5 million, okay, rand. I want to know what did we pay for this business? Is this the extent of this? Is this cash that was paid? What is the extent of this consideration? Right? What else are we trying to think? Like, okay, but was there something else? Right? Were there maybe shares issued that I don't know? Right? So I need somebody to tell me, how did we pay for this business? Right? Now I think, and I can't really remember. Yeah, there we go. We get a little bit of insights into that in this sentence here, and I mean, this is a unique scenario, right? Because all APCs are not going to be the same, okay? But this is just a unique APC wherein you got a trigger for accounting in one thingy, and then they almost follow on this idea of Big Ranch, and they give you information about Big Ranch in relation to another trigger in another email, okay? So this is a unique scenario, right? I mean, maybe it'll be different in all year, but the point is the skill. What is the skill? I'm trying to do my research to the extent that I can. Okay, so here it looks like 14.5 million was paid, right, for this business. So that gives you a little bit of a sense, right? So I'm applying to the extent that I can, right? But I don't really have any much more information than that. Okay, cool. Any other thoughts? What other information do you want? If you're a CA in practice, I'm a CA, I say we purchased this business. I need you to help accounting for this. Online, please, as well. And I've got another question from Remember, which I'm happy to cover once we finish this whole train of thoughts. Anyone else online? What other information are you looking for? You at your office? Yeah, go for it. Continue your thought. Yeah, you in the sorry. I don't know whether or not like my eyes are just not looking right, but yeah. Absolutely, right? Because now we need to recognize Big Ranch's asset, identifiable assets, and assume all of their obligations. Now, those are going to come from two places. One, they're going to be ones that Big Ranch has already recognized in their statement of financial position. And two, there will be some that we need to recognize in a business combination context because the recognition criteria is relaxed, right? So, one, the ones that they've recognized. I need their statement of financial position. I haven't been given the statement of financial position, but how can I be smart about this? Can I think through it in terms of what I can expect their balance sheet to have? Go for it. $100%. Look at a similar restaurant, right? Let me find another restaurant. Maybe Spur Group online. I can find, or I don't know who else. Maybe famous brands. I don't know whether or not they've got restaurants in their portfolio. Let me look at their balance sheet, see what type of assets and liabilities they have. Absolutely. Anything else? Anything else? And sorry, I think online I'm also getting a lot of questions from like just principles perspective. So please explain how that works. Please explain how this works. I think those type of questions, I mean, wow, welcome. I want to park those type of questions because ultimately, you remember, this was, for instance, this was last year's exam, right? And I think what's more important, at least my view, my opinion, is what's important in your preparation for this exam is process, thought process, approaches, principles. How do I go about thinking through things? How do I go about doing my research? I think the nitty-gritty is about how does this work, how does that work at a group level, explain this principle, explain that principle. That, I think, for me, for this conversation is less relevant, and we'll just digress our conversation and we'll consume a lot of time. So I'm going to note all of those type of questions. I'm more than happy to address them after the session if you want to stick around. But I think for now, let's keep the conversation, everyone online. Try and answer my questions as well, just so you can also contribute to the conversation, because I'm not getting much. And then, yeah, the questions that are specific principles questions, I'll park them and I'll address them towards the end. Okay, thank you. So keep your questions coming, but yeah, all specific principles, I will address them at the end. Absolutely, absolutely. So online says the impact of existing relationships with restaurants acquired, like lease arrangements. Okay, so I want to park that point because I want to also just go a little bit through the full process. Okay, so just a general question: how can I go about imagining or thinking through what big ranches child balance may look like, considering the information I have in IOD? So we've spoken about what external research we can do, but now what about coming back at the back? Yeah. Absolutely. Let me try and look at Fodjan's. I mean, yes, they are a franchisor, but they I've been told that they sometimes acquire businesses. So and sometimes have restaurants. So maybe I can also get a little bit of a sense in terms of what yeah, Masefela. Let me know if the thing is a bit too hectic. So maybe that I'll go back to the original mic. So can I just get a sense in the room completely whether or not the sound is bad? And if so, then we'll try and make a plan. Okay, can I just get some more views? Cool, so I can use this balance sheet as well as a source. Yes, I know it's not completely the same, but I can use it as a source as well to get a sense. And go for it. Okay, so I think Shumani said I think it's on your side. Cool. Yeah, go for it with your hand. Yeah. 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 Yes. Yeah. 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 No, completely get you. Now, and that's why, like, I almost caveat to say it's not exactly the same, but it can just help you almost get a little bit of a sense, right? So, as an example, right, we've got right of use assets as a second line, and we've got PP as a first line, right? You can say, okay, not perfectly the same, but I'm seeing a business here that relies on some PPE and some right of use assets. I would expect to see similar in a restaurant, almost like to just ignite the thinking. So I completely get your point, but I'm just, yeah, so it almost helps to sort of ignite the thinking somehow. So let me have a look. Okay, so yeah, so just to revise what was said in the room. Actually, sorry, you actually reminded me, because I'm not using this. Can you use this mic for the room? Yeah, cool. Sorry, I've handed over my mic for the room. Okay, so the point that was made at the back. Okay, so the point that was made at the back, okay, now that the mic will roam around, is that the businesses are not the same. So Fodjan is a franchisor, whereas Big Ranch is a restaurant. So the room coming from the room was like it's a little bit too different. I can't rely on this information. But to also unpack that point a little bit further is to say that Yes, it's not the same, but it's at least almost like inspiration. If you look at it as inspiration to say, I'm just going to look at these line items just to give me a sense of the type of stuff that I need to be thinking about. And in the interest of time, I'm just going to go to the other sort of last little piece of information here, which I think was actually quite interesting. The income statement. Right? Where do incomes and expenses come from? Typically items from the balance sheet. Right? So I've got big ranches income statement. So then surely then I can make up what the balance sheet looks like, right? So fine, revenue, cool. Food and beverage costs, right? I'm expected to see inventory on the balance sheet. Okay, employee costs. Okay, maybe there's some employee liabilities on the balance sheet. Operating expenses. Okay, maybe there's some accruals, prepayments on the balance sheet. Franchisee fees. Again, maybe there's a contract liability. Sorry, not a contract liability, so that's expense. Maybe there's a prepayment on the balance sheet. You get my thinking. Down there, I'm seeing depreciation of furniture and equipment, or there's PPE on the balance sheet. Right of these assets, okay, I definitely have leases. I've got interest expenses from loans and the liabilities. I've got loan liabilities, and I've got lease liabilities expected. Okay, I can now visualize the balance sheet, or at least most of it. So now what am I going to do with this information? I'm now going to tie the dots together. So now instead of saying I'm going to research all of IFRS 3, I'm going to focus on these items. So obviously those are going to come up, right? Likely to come up as what I need to recognize. So what are the principles? What are the principles of dealing with a lease at acquisition, as from a leasee's perspective? How do you deal with a loan liability at acquisition? How do you deal with employee liabilities? Okay, what's the principle on employee liabilities? What's the principle on cost of, inventory on the balance sheet? What's the principle on IFRS 3? So now you've almost specified your research. What are you expecting from the examiner? Okay, for inventory, I'm expecting the examiner to give me a fair value. Right? Get on the day. If the examiner doesn't give you a fair value, you can type there, IFRS 3 is a very complex standard, that everything's by fair value. I'm concerned, or I'll need to figure out what the fair value is, etc., depending on the context of the task. But the point is, you're coming through with the expectation from the pre-release onto the day and saying, oh, I was expecting a fair value of inventory. Oh, you didn't give me a fair value of inventory. Okay, let's have a conversation. I need that number. All right. Maybe they give you a net realizable value. You're like, oh, hang on, that's not a fair value. That's something that's different, right? But what's the point? You've thought about all of that before you ended up on the day. Now, I don't think it actually came up on the day, but the point is, if it did, you're sorted. You don't have to be fumbling around figuring out what the difference is between NRV and fair value on the day because you thought about it. And this is how you directed your research, because you just didn't revise principles. You tried to apply to the extent that you could. Now, I'm not going to go through this whole email, right? There's a lot of information in here, but also in here is a point that somebody made that I want to come back to, is that reacquired right. Okay, we now have a pre-existing relationship. The pre-existing relationship here I've got to deal with. The fact that the franchisee that we're buying has an existing franchise agreement that we are reacquiring in the business combination. So we're settling a relationship as a group, right? There's no longer, you cannot have a franchisee-franchisor relationship in a group context. So this one economic entity. Okay, one, we're settling that relationship, but also we need to recognize an intangible for our reacquired rights. How do you start thinking about that? When you thought about the franchise fees, how do you deal with that, right? Like, oh, there's actually a relationship that exists. It's a reminder. Let me figure out that those reacquired right principles in your perspective, right? That's something that you wouldn't have thought about or researched if you took the approach of, I'm just going to follow my ITC syllabus, right? And that's how I'm going to revise. Okay, APC is a whole different ballgame. APC has no scope. APC is not limited to your ITC syllabus. So that's the risk you run if you rely too much on your ITC syllabus. There could be stuff coming through that was not in your ITC syllabus. Okay, and then the wheels start to follow. All right. At the back, go for it in the cap.
Okay, so
oh yes, the mic.
Right?
Yes.
The pre-release, and it's
Sorry. Yeah, go.
that's document 4 of the pre-release, and now we're taking document 4 and linking it to document 2, which ultimately also document 4 has its own trigger and also a task coming after it. So is this now saying, as I read the pre-release, link the document also, see what information I can use from the other document that will help me answer or prepare for the other task?
100%. Remember, we're trying to simulate roll-up, and let me just get a sense. We all heard that in the thingy here. Yeah, heard it. Cool. And And remember, we're simulating real life, right? If you joined, I'm the CFO of Fodjan, you join me as a financial manager, and I send you all of these emails, right? One email I ask you to console, whatever, and in the other email I give you the income statement, right? And then as a chartered accountant, you can't make that connection, right? For you, the only way you can connect information is if I send it in one email, right? That's not a CA for me. So absolutely correct, and I really like your observation. It's one set of information. PRI, IOD is one set of information, and you need to look at it holistically. Now, yes, you will be able to get the primary indicators, or you should be able to get all primary indicators using the primary information, which should be in the email in question. Agreed, right? There's not going to be a task where all the information will be sitting elsewhere and there'll be nothing in the specific email. That's not going to happen. Okay. I'm not psychic, so I can't say that's not going to happen. Maybe they'll do it. Okay. But my point is, by focusing on the immediate information, that's fine. You should be good. But you need to always look at it holistically to be more than fine, to be good, to understand the information. Okay. Go for it. Hand in online.
Hi, Arsene. I probably just got a bit confused with regards to the principle there, but you mentioned the reacquired right. And then when I'm looking at just these extracts, I think these extracts are as at year end and not as at when we purchased the entity. So I'm not sure how the reacquired right is being introduced because I'm assuming we're speaking about the at acquisition journal entry, right?
Yeah, correct.
Okay, yeah. So I don't know if you could just clarify that for me, because then the franchise fees, I was assuming that they come from then us being bought by Fodjan, and then us being bought by them, then we paying these franchise fees and these procurement fees, which are then coming into our apps. So how would we then have a reacquired rights in a just new relationship ever making sense?
Okay, cool. Good question. So timelines are important, right? So when did we acquire this business? The 1st of July 2022, right? So midway through the year. Okay, so this is an existing business. Big Ranch is an existing business. So, okay, and then coming back to the income statement that we have here, it's both last year and this year. Financial year 2022 ends on 31 October, right? So that's after we acquired the business. So that's the franchise fees throughout the year. Okay. When we acquired this business on the 1st of July 2022, there were an existing business that had an existing franchise and paid for an existing or pay for franchise, the franchise agreement from Fodjan. So that right exists. So to answer your question, if you look at the last column, that's after we acquired it, and in the sort of pre-lease information, they describe, or maybe I think it was the IOD, they describe how they had an existing franchise agreement, or I think in the pre-lease actually. And yeah, so this is almost triggering you to start thinking about. Now remember, it's still the pre-lease period, right? So the objective here is to start thinking about, right? So this is a trigger for me to start thinking about reacquired rights and whether or not it's relevant or applicable. So yeah. So to answer sort of both your questions and sort of to contextualize as well. I'm hoping I've
makes sense. Yes, it did answer my question. I see that I missed that other column. Thank you.
Cool. All right. Lost my train of thought. Lost my train of thought. Okay, cool. But I think we've probably finished this whole thought. Let's have a look here. I forgot to. Okay, cool. We've sorted out the mic issue with the questions in class. Tata, I'm not sure what you want me to repeat. So yeah, all about exactly. So okay, thank you for reminding me, Moseri, for the next point that I want to mention is now we've dealt with the items on the balance sheet. Okay, now we need to think about the items that are not on the balance sheet. Okay, can I get some quick examples before we take? Oh yeah, we have some time. Can I get some quick examples? So now we're trying to think about when recognizing identifiable assets and liabilities that are on Big Ranch's balance sheet. But in a business combination, we could be in a scenario where we need to recognize additional assets or liabilities that are not necessarily recognized by Big Ranch. What are the types that exist and the types we can expect from a company like Big Ranch? Yeah, go for it, in front.
I think internally generated brands
Yeah, absolutely. So you just repeat it for the room again.
Okay, so I'm saying maybe we should start to think of internally generated brand. No, not really. Brand can be because we are in a franchise, so we have to adhere with the big franchise with the Fodjan's brand. So we won't have maybe customer lists.
Okay.
Yes.
Yeah. I like how you're unpacking it. Okay, but continue.
Yes. Then also we can, since it's an existing business, are there no legal obligations that what is this? Litigations that are there that we could have recognized in our we could have disclosed in our financial statement that might need to be recognized.
Absolutely. And I love how you kept it relevant. So like, almost like you see how the skills we've discussed so far came through in that response, right? Oh, I can revise a blanket list. Brands need to be recognized. But from that, I was like, there's a potential for brands to be recognized. However, that doesn't make any sense because they're a franchisee. They should be using Fodjan's brand, right? So now he's creating an expectation. So what happens when he sees a brand recognized on as a journal entry? Boom, that's a problem. Okay, where do I start with your question? There you go. You create an expectation. You know where to start in your review. Okay, but what else am I expecting? Oh, probably have a bunch of customers. Oh, okay, sure, yeah, definitely. Maybe a customer list. Okay, let me start thinking about the requirements for a customer list. What are the type? Then we start like unpacking. What are the type of customers we can expect Big Garage to have? Would it be when you go to Spur as a restaurant, or you go to KFC? Do you give KFC all of your details? You give them your contact numbers to buy food? Or is it a different type of relationship? And depending on the relationship you have with KFC that you can think about, do you think you can recognize it as an intangible asset? And you mentioned litigations, right? It's a food industry. Right? It's highly likely that there's going to be some litigations here. Not highly likely, but there's a high possibility that there's some litigious issues. You know, food regulations are quite onerous. Okay, so maybe I can expect a little bit of that. Maybe let me start thinking about the principles quickly. And maybe there's mentioned somewhere in the scenario about a potential litigation. Who knows? Then thinking about that in that way. Okay, so I think that's it. I want to talk about the PRI and the importance of that process. Okay, before we move on to the IOD, we're going to take a break at 10 o'clock for about, I'll give you guys I know it says 30 minutes on the clock, but I want to cut that short a little bit because we have a lot to talk about. But yeah, I want to pause here and see if there's any questions in terms of the pre-release period and the extent of your research. Now, again, I want you to focus on FS3, what we discussed is important, but focus more on the principles and the process, because that's what you can always replicate. You don't know what standards is going to come on the day, on whatever December, but the process is always going to be the same, okay? So key takeaways, the scope is incredibly important. Get comfort with the scope. Just copy pasting principles is not enough. I need to extract to the extent that I can from the PRI, apply. Where there's gaps, where I can't, I need to create expectations of the information on the day. So I flip the script on the day. So I come there expecting something for the examiner. I'm not just a receiver of information, right? So then it helps with your morale, it helps with your confidence when you start receiving the information that you were busy expecting. Something like this is also equally true in a deferred tax trigger. I think year before there was a deferred tax trigger, same principle. Okay, I can do one line deferred tax, but how do you focus your research? Same thing. I go to the balance sheet. Right? That's where deferred tax comes from. Look at the balance sheet, what's there? Okay, cool. Then I can now think about specifically those line items to get ready. But now, does it mean that this is the only thing you should prepare? No. Okay. Focus of your preparation was what we discussed. Okay. But still prepare everything else because you don't know what curveballs are going to come on the day. And the trigger is FS3. Right. So still look at indemnification assets as an example. Right. Still look at it. But then now it's almost like I'm happy for you to just think about the principles because there's really nothing here that can give you a little bit more insights into that. Okay. All right. Mia James says customer lists can be confusing. Can I recognize based on the fact that they have customer loyalty points? Yeah. So Mia James, again, very principle specific that. So I'm going to cover that towards the end. But just as a quick sort of one thing that I can highlight at this point is that there are examples in FS3. So look at the illustrative example in illustrative examples of FS3. They have a table in FS3, and it literally runs through very different types of customer lists and why those are met or not. Okay, so that can be a nice starting point. But then yeah, I'll deal with the specific principal issues at the end. Hi, I missed the explanation you were giving. No, Lutando, please repeat. Ooh. What explanation did I give Nolutando and what did Nolutando say? Okay. Please just remind me what the question was, and then I think I can repeat. And then, yeah, I agree with everyone in the chat. Provisions, intangible assets, contingent liabilities, brand, Lorato. Just cognizant of the conversation we had in the room. Yeah, when thinking about a brand. Okay, cool. We've got 15 minutes. So let's almost go to the next phase of our conversation. We'll take a break and then we'll come back and finish up. So next phase of our conversation, let's now talk about the IOD. So you've done your work, you've done your focus preparation, and come information on the day. So what I'm going to do now is I'm going to actually I'm going to put my comments in the actual document here. So we're not going to have to decide this.
I raised my hand. I think you missed it. Can I just ask you one question before we move on?
Yeah, so we'll work with the actual document. I'm just going to drop my comments as we go along. Okay.
Hello, can you hear me?
IOD, come on the day. You've done your wonderful research. Now it flips right into the next phase. So we're comfortable. When we've taken Kamogelo's advice, we learned our stuff, we've personalized it's our own. Now we're coming on the day. Whether you read 2 times, 3 times, that's completely up to you, depending on the speed at which you read. But let's have a read of the IOD and let's unpack the actual task. Okay. So hello again. So you're getting an email from the CFO of Fodjan to you, the financial manager. As per my email last week, Fodjan has not yet prepared a pro forma journal entries with regard to the acquisition of 100% of the equity of Big Ranch for the purposes of preparing Fodjan Group's consolidated financial statements. Do you want to unmute so I can hear it? So I unmute my side. Yeah, go for it, Lorato. Sorry about that.
Oh, yeah. Can you guys hear me now?
I can hear you now.
Okay, so I wanted to ask about the research, right? So in the program that I was in, they usually say when you get a trigger, you research all 4 contexts, like all FBS, whatever. And when I was listening to the videos, the reflection pack, I actually heard the presenter say they were very specific. They're asking you about tax and accounting, and those 2 are already so broad that you're even trying to narrow them down, because if it's 3 on its own, for example, is big. So I wanted to ask that on top of this, because I feel like with my team, we focus so much on covering all 4. So I know if we give this kind of research to someone, they're going to come with a big pack that 50% of it is talking about financial management and what's this, and auditing. I am so sure they should research all 4. Do you then say on when they're very specific on the what's this, the content, what do we call them again, like accounting, whatever, do you like focus on that, or on top of doing the research about accounting and tax, which were high triggers, you still go on and research about valuations, FBS, all of these, and be ready for all of them, which then means this research could be like 50 pages? Or would you advise us to rather stick to what we were at, like the key triggers that you can like see for sure? Yeah,
great question. And yeah, I mean, there's no time, and we were talking about earlier on in terms of having to cover all the triggers, and it's 5 days, and it's just you're just one person, right? So I think that again, and I guess the process of the 5 days is so underrated, and the importance of it is, but the importance of it is so significant in that understanding the actual trigger almost has this massive knock-on, particularly to your research. Now, in a scenario where it will depend on the trigger, right? So with the trigger, the one that we had here, okay. Where is it? Just share it again. Right. This is a very specific trigger, right? And it's very specific in that it's asking you, or it's letting you know that we've not yet prepared the accounts. I'm going to need your help with this, right? So what am I going to need your help with? I'm going to need your help with the journal entry. And I'm not going to need your help in terms of valuations or discounted cash flows. I'm not going to need your help with audit procedures or internal controls. I'm not going to need your help with governance. I'm going to need your help with the journal entry, right? So in preparing yourself for this task, you must prepare yourself for the journal entry. So what is included in the journal entry, something that we didn't cover, is, for example, because we spoke about the stuff that's on the balance sheet and stuff that's not on the balance sheet. One thing we didn't discuss And you can start thinking about if you take the same approach, right? Oh no, it's not there, but it's fine. Right, when you cover this line, right, can act as a reminder. Oh, tax, right? Tax comes through. So now tax is a journal entry, right? So therefore, how are you going to prepare for the deferred tax journal? By being comfortable with the tax treatment of all the stuff on the balance sheet that you have picked up, right? So, and remember also, whether or not it's a business combination or separate financial entities, that doesn't impact tax. It impacts accounting. So we're changing the carrying amounts for accounting purposes, but the tax base is always going to stay the same, or unless you change the manner of recovery, right? The tax base will stay the same because tax doesn't change. Tax doesn't care about legal, consolidated financials. They always look at separate legal entity. Okay, so understanding those principles again to the extent of your tax research, absolutely fine. Okay. Do I need to cover the rest of the disciplines? No. My answer is that no. But do you need to cover, is it important to always think about sort of broadly, like multidisciplinary approach? Absolutely. So do you want to think about very high level valuation principles? I'll say max, if a page, a page is too much. Maybe just think about a few things, right? How complex are the valuations? What type of valuations could work, maybe not work. That's fine. I'd put it on the page as like almost like call it HLA pervasive stuff indicators to think about. That's fine. But then to your point, coming through with the 50 pages worth, or let's say 20 pages worth of valuation principles on a trigger like this, now that doesn't make any sense. Right. The next trigger we do, it says specifically, I need your help with accounting and tax. Just look at accounting and tax. Okay, curveball is not going to be I triggered accounting and I'm going to give you auditing or management accounting and finance. That's too hectic of a curveball. Okay, there's always going to be a little bit of a, I mean, maybe it'll be accounting heavy, the trigger, and they'll maybe hint at a little bit of auditing and then bring auditing. Maybe that's possible. I'll let Kumu comment on stuff like that in the session. I mean, 30 in the session you have with auditing, but a curveball is not meant to be that hectic. Okay. So cool. Right. All right. So I hope I answered that question. I'm sorry about that for not, we were muted the side, so I couldn't hear you, Lerato. So apologies for not acknowledging you when you were speaking.
Yes, thanks. You answered it. Thank you. I just wish they were here because I have to convince them to not give me a 50-page.
Any other question? Go for it. Yeah. Okay, so no question. I thought there was a question, but it doesn't seem to be a question. All right. Okay. Let us go back to this. Okay, cool. So per my email, blah, 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 just rehashing the trigger on the day. Our senior accountant, Ralph Yankees, prepared the attached transaction summary and draft pro forma journal entries. Right now, in your pre-release information part of the process, you're advised to be like, try and preempt what you're going to get on there. Don't let that. The purpose of that is not to do like a mock-up response. Okay, a solution for an APC task is never going to be copy-paste. In fact, it's the complete opposite. Right, just wasting. In fact, you're killing yourself twice. Not only are you not going to get anything for the task, you're just wasting your time. Right, so it's a double whammy, really. Right, so doing a pro forma response is really not going to get you where you need to be. Okay. So our senior accountant, Ralph Yankees, prepared the attached transaction summary and draft pro forma journal entries. Makes sense. Okay. I'm given a transaction summary. So, okay, cool. I flipped the script to my examiner. I've come through, and maybe try this when you reflect on this task. I've come through with the information that I expect to be in this transaction summary. If it's not there, that's just a point for me to raise. I'll be like, yeah, look, we need to think about fair value of inventory. You didn't think about that, right? It's an indicator. It's APC. The answer is not going to be black and white like ITC vibes, right? It's not going to be like that. Just acknowledging a problem, right? And I think we often, also what I'm looking for, you don't put enough emphasis on how important it is. Just being able to identify an issue is really half the battle in the real world, right? The worst thing in my space as an IFRS specialist or whatever is going to a table and you don't even realize that this particular transaction has this impact in terms of accounting or even tax. Imagine the tax consultant. They see a transaction, they completely miss that there's a section in the Income Tax Act that deals with that thing, right? So identifying an issue is actually quite an important skill as a chartered accountant. So being able to say, hang on, you've given me this information, however, I need this to make this conclusion, to finish off this task. That's a skill, and that can earn you indicators in a task. Okay, so I've got this transaction summary. So I flipped the script. So I'm expecting things from this summary. I've got it in my pre-release. I've studied it. It's in my brain, actually. That's where it's sitting. Then I've got a job performer journal entry. Okay, cool. You've given me the journal. So now when I was trying to prepare for this task, forget about drafting a technical memo. Forget about, I don't know, drafting the journals. Clearly, this is going to be some sort of review task. But it's fine. I have an expectation in terms of what I want to see. Yes, if your research goes to the extent of doing illustrative journal entries, that's fine, right? That's okay too. In fact, that's good. I think that's a good thing to do, right? Now you have your expectation, and now you're going to compare it to what you're seeing on the thing. Ralph has a BCom accounting degree, but admitted to having limited experience with accounting for business combinations. Now, this is a sentence that I think, and I could be wrong, you can do your own reflections, that we do not, or rather that we take for granted. Talk to me about the sentence I've highlighted. Is that an important sentence? Does it matter? Does it not matter? Why does it matter? I hear some murmurs in the group. It does matter. Can the mic be ready to move around? If somebody wants to comment in the, yeah, go for it.
I think it just gives you an expectation of, it gives you an indication of what to expect from what you're going to review.
Indication of what to expect.
Yes.
What to expect in terms of what?
I mean, if with limited knowledge and experience, you're probably going to find some errors. You're probably going to find missing, I don't know, but yeah, I think I've covered it.
Cool. Happy with that. Good. Yeah, happy with that comment. Let me just acknowledge the people in the group too, and then I'll come to you with Dan. Sorry, in the chat. Okay, Lizeka said it matters for communication purposes. Let me have a look here. Tone in answering, depth of response, and can I also so all the people that like Lizeka, Itai, Gemma, Gama, sorry, I think that's your last name. Can I get and then right? So I'm happy with what you're saying, but what does it mean about the depth of response? So what are you going to do about that? Itai, what is your tone going to be like? Lizeka, tell me what your communication is going to be like. Let's have that application coming from the chat. Indicates that he may have made some errors, not comfortable with the business combinations. Same sentiment at the back here. But because you have prepared journals, okay, cool. I will come back to that point quickly. All right, can I have a comment from the room, please? Yeah, you can go ahead.
Oh, I was just in addition to what you also said. For me, when I read that statement, everything from what he has provided, I basically read every single line with like scrutiny. So what is being said about what is done, I'm comparing every sentence to what I know about the pre-release, from the pre-release and the whatever it is that I would have researched. So it just heightens the level of scrutiny is supposed to have, I guess, over whatever work is being performed. Just something to keep in mind, to just always be alert so that you don't miss. Certain things can be hidden, so to always be alert for possible errors, I guess.
Absolutely. Agreed. Can I just respond to all of this? I tapped all of your comments here, so we'll unpack it all together. And I think there was another question. So the reason you're providing his response is for them to change to correct what they did, so the extent of the depth. IFRS is complex. Okay, cool, I got that. IFRS 3 is complex standard, like not to address issues accordingly. Expectation of possible errors. I need to be very clear on what's wrong, now it's supposed to be done, and how to correct it. You really have to. Wrong. Why? Correct. Watch out for omissions, errors. Cool. Right, let me just address this question and then I'll come back. There's a direct trigger, IFRS 3, but I think candidate's biggest fear is getting the IOD, and the CFO was like, oh, I had not seen that the journals were prepared. maybe you can help with formulating procedures to audit the journals, and suddenly an audit task didn't consider that. But because you have prepared the journals in the pre-release, you didn't, well, you'll not be able to use it for audit. You're already, yeah. So I think, okay, so curves on the day time are not intended to be tricks. I think curve of the day, you're thinking, oh, the examiner is trying to trick me, right? They're just trying, it's rather case study development, right? So your case study is developing from the information that you're given from the pre-release. And the key word is develop. Like they're not going to introduce a new concept or a new thing that you haven't seen before, right? It's always going to develop from the IOD, right? So as you call them curveballs or whatever you call that, but it's always going to develop from something. Now, accounting and auditing are inextricably linked, right? And that's a difficult one, because yes, you can't audit something, you can't do substantive procedures of something unless you understand what the accounting needs to be, right? If you think about the assertions, right? The assertions are pretty much linked to accounting principles. Not linked to accounting principles, but you're testing accounting, the application of the accounting principles. So there's an inextricable link. So I think from an auditing perspective, right, can get a little bit tricky, but I think I'm going to risk, because I'm not an auditing expert, so I don't look at auditing tasks. I haven't seen auditing tasks in the past. I haven't seen what SAC has done in the past. So I think that's definitely a question, because I mean, you have the professional team to chat with Ferdy about, in terms of just how much the auditing task can develop. So that's where I'm going to leave that sort of link. But from an accounting task, it's always going to develop from what you had in the pre-release, right? A curveball is not going to introduce a brand new concept on the day. Okay, just to address that point. Cool, and I think everyone else is just sharing all the sentiments in terms of cool. So yeah, so summarized there in the chat. Thank you everyone in the chat online for contributing, and also in the room. Absolutely, and I think the key thing that I want to get unpack or make it very clear here is it's somebody that you're being told has limited experience, right? So in our review, it's likely that not only do we need to explain things in a way that it's understandable, so not to, so yes, it's going to become accounting, right? So at least it allows us to use some accounting language, right? Like technical, it allows us a little bit of scope for jargon, right? Because it's become accounting. However, we still need to explain to him in a simple to understand manner, okay? So that's still important. So coming through with like this hectic, if it's technical, like a technical memo to an audit partner, it's not going to fly here, right? We need to explain to it's almost like a coaching moment, right? Your response is more a coaching document, so that, and it comes through a lot later, right? So I'd appreciate it if you could review the journal entries and provide comments before he sends it out for review by the auditors, okay? So clearly here also highlighting the fact that like Ralph needs to then engage with what you've given him, learn and correct. You're not going to be the one doing the correcting, okay? So it's important therefore that whatever you send back to Ralph. Okay, at this point you actually don't know, right? Is it going back to Ralph, or is it going to Elijah? But then I think down here you get that clarity. Okay, it's going to go to Ralph. So Elijah's just going to forward it to Ralph, right? So your ultimate audience here is Ralph. So all that context in terms of how you need to go about your responses becomes crucially important here, right? And then again, somebody mentioned completely. Heightened professional skepticism. I need to think about completeness, because if he has limited experience, chances are he's missed a lot of issues. Okay, I need to think about completeness, right? And they say it here, but for me, that's kind. Yeah? They didn't have to say that. That's implied in a review. Okay, you have to do a completeness test, right? If you're reviewing something, critiquing a piece of work, and you're not doing completeness tests, your review is not complete. Okay, so they felt the need to still say it. Can I get a sense why you think so? Let's get ahead into the examiner a little bit. A review is implied. Sorry, a completeness test is implied in a review, but the examiner still say, hey, don't forget completeness. Why do you think the examiner would do that? Lorata says, because you always miss it. No, that's not the reason. There's a lot of things that you always miss, and I would feel the need to help you out. Belinda says it's emphasis. No, Nokubonga says key indicators. So emphasis for what? Yeah, there's in a review, there'll always be something missing. Emphasis, what is the examiner trying to emphasize? Which feeds into the next phase. Sorry, I see we're over, so I'm gonna pause soon. It leads into the next phase of what you need to do before you start responding. What is the examiner trying to emphasize? Hand at the back.
When I read that, I thought he's trying to say, make sure you address all the when you do a completeness, that make sure you address all the journal entries, and also be aware that if he's done a journal entry and you think it's wrong or he's done it half correct, there could be something else that needs to supplement that journal entry.
Yeah, absolutely. So yeah, so agreed. I'm not disagreeing with anyone's points. Agreed, right? With that point that was also made here.
Is it only on my side or he's muted and that's also frozen?
Hear you.
Me too.
It's not just you.
Stuck on my side.
Frozen. I think it's frozen.
Yeah,
Arson.
I think cannot even.
Can they
It's
even
load
hear?
shedding.
Oh, really? The Wi-Fi is gone.
Ew.
Taonga. Why are you running?
Ngoni, who are you shouting at now?
And like just high level, do these people not like amaze you guys? We see
I mean, someone was muted while they were still talking.
someone doesn't want us to.
Lerato, please unmute. We can't hear you.
Every time I mute, someone mutes.
We want to hear what you think, Lerato. It's very interesting.
Okay, sorry about that, everyone. I'm back. I just had. Can you all hear me?
Yes.
Is it possible to like see who keeps on muting me? Okay, it's good.
Asen, we can hear you. Guys, please stop muting Asen.
Right. So sorry, I'm back. So sorry about that. But anyway, just to complete the thought before we go on a break. I promise 5 minutes max. Now it goes into the next phase of our response, right? So we've done the work, we've unpacked, or we read through this thing, we've identified our audience. But now there's a key, before you transition into your typing away, there's a key step that you need to perform, in my view, is that you now need to cast your mind to what is a competent response. Right? So cast your mind to the examiner, right? And ask yourself, because ultimately you know how this process works, depending on which program you're on, and the normal people will know my terminology. If you're in a different program, you probably have different terminology, but it's all the same concept. There's a straw man that gets created, and it says, this is the characteristic of a competent response. But that's what they're going to do when they're assessing your response. And then they're going to use that straw man or that characteristics to assess whether or not you have sufficient coverage, you've ticked enough indicators to demonstrate with sufficient depth. So you can only tick off an indicator if you have sufficient depth. Apologies for, a lot of people know the terminology. Other programs, you probably use slightly different terminology. Tick off the indicator. Then after I've done all of that, how am I going to standardize how I'm going to assess that this response is competent? I'm going to use the straw man. So what does that look like for this task for you? So if you had to put your shoes in the examiner, what would you need from a candidate's response in light of what you've asked them to do for that candidate to be competent? Such that if they don't do one thing or the other, you wouldn't be satisfied with the response. Can I get it? Yeah, in the front. Can I get a mic to the front here?
All right, so what I would be expecting is to see two components. The review of the journals, and then the second part that covers the components.
Absolutely. So, as a minimum, so this is why the examiner telling me that. Because if they hadn't said that, right? Remember, review is still part of, sorry, a completeness test is still part of a review. So it means as a competent candidate, so long as you successfully perform the review with sufficient coverage, I'll be comfortable that you're a competent candidate, right? And it could be a scenario that you've missed all the completeness points, but there were just enough very clear issues such that you had enough coverage. Because remember, we're not looking for you to get 100%, right? So you ticked off enough of what you could see, right? And you've missed all of the review points, but you can still come out as a competent candidate. The difference here is that now, if you don't do a completeness test, that C is gone. Your review could be perfect, but if you don't do a completeness check, that's it, you're dead in the water. Now, this can come in a multitude of ways, right? So it doesn't have to be like, so that's important of components of a task, of being able to stand back and be like, fine, how many questions are there in here? And what is the examiner expecting for me for this response of mine to be a competent response? And in this particular unique scenario, it's got two components, and that's the review and also the completeness. All right, cool. So I think I'm going to pause at that point. We're going to take a 20-minute break. I keep going to my watch, but my watch is dead. Let's be back at 10:30. And then we can sort of continue. I think that's right. Yeah, about 10:30. And then we can continue on with our discussions. Okay, thanks everyone.